When do you think the breakout point, like the latest data is showing that new mortgage applications are down like 40% or something, and the markets are starting to take a hit. When do you think, before I go further, the IMF says that, I believe, interest rates should be at least 1% above the inflation rate. So that would mean if we're at 8% now, the interest rate should be 1% above inflation. So our interest rates should be now at least, 9%?
Yeah, well, I would want more than 1% above inflation, because that's not a good enough return. I mean, 1%.
No, but I'm just saying,
yeah.
Even what they're saying.
Yeah.
And then you take not only the United States, but the ECB. I mean, you got negative interest rates over there.
Well, there's negative interest rates everywhere. I think they're the most negative here because we've actually got the highest inflation. So even though we have higher nominal rates than what you would find in Europe or Japan, we have lower real rates because our inflation rate is higher. Yeah. And of course, that's the unofficial. The real inflation rate, or the official one, the real one, is quite a bit higher than that. But look, when mortgage rates go up, and now they're back up to about 5%.
Right.
And historically, that's still low.
Yeah.
But in recent years, they've been well below 4. I mean, people were getting mortgages below 3.5% on 30-year fixed. And if you look at home prices, because they're up like 20% year over year, home prices are at record highs. And home affordability is at a record low,
yep.
And that's before interest rates go up. So the only thing that's keeping these overpriced homes marginally affordable is the low mortgage rates. But if you take away those low mortgage rates, and mortgage rates move back up to maybe 7, 8, 9%, which was normal, before the 2008 financial crisis, we get mortgage rates back there, something's got to give.
Oh, yeah.
Otherwise, nobody can afford to buy a house. And what's going to give are the home prices. Home prices are going to crash. But what's not going to happen, though, is new construction, because inflation is driving the cost of building new homes through the roof. So we're not going to get any new homes. If you want a home, you're going to have to buy one of the homes that already exists. But if you don't have any money, and somebody wants to sell you a house, I mean, the price is going to have to go down. At some point, real estate could become an all-cash market, because most people may not even be able to qualify for a mortgage.
Yeah. But when do you think, what inflation rate interest rate do you think, when the Fed goes to, that it's really going to bring down the markets and the economy?
Well, I think we're already there. I mean, I think the market's already broke. We just haven't collapsed yet, but I think we're headed lower. The bond market clearly broke. But if you go back to 2018, the wheels really came off the bus in the fourth quarter of 2018.
I remember.
The Fed got rates up to about 2.25, 2.5, and then they had to stop hiking. And then they had to stop quantitative tightening, and they ultimately went back to zero in QE in March of 2020 with COVID as the excuse. This time around, I think the breaking point is much lower than what it was in 2018, because the breaking point is a function of how much debt you have. So the more debt you have, the bigger the impact and increase in interest rates is, and the lower the increase has to be to create that impact. So because we have so much more debt now than we did before COVID, the economy is more levered up and more dependent on cheap money. As that money becomes less cheap, you're going to have a collapse quicker. It's like we have a much bigger drug habit now.
Yeah.
And because this drug habit is so much bigger, we're going to go into a relapse and withdrawal much sooner with an even smaller reduction in the dose of our monetary heroin, which is where we're headed. So I don't even know if the Fed's going to get to 1% before everything crashes.
Wow.
I mean, right now we're at 1/4 of 1%.
Yeah.
So one more 150 basis point rate hike, that might do it,
Yeah, and as you said, we're really in negative territory when you put inflation into it, but they never talk about that. And by the way, the other thing that I see really crashing very hard is going to be the commercial real estate sector, particularly the offices. I was down in the city last week, and at rush hour, going north on the West Side Drive between 51st and 57th Street, at rush hour, 5:15, as I'm going east on 51st Street, and I look back on the West Side Drive, not one car Not one car in rush hour between 51st and 57th Street, and 4 rent signs all over the place.
Yeah, the only thing that's propping up the commercial real estate market is the cheap money, because the rental income is not there, and it's obvious that more people are going to work from home. They're not going to be commuting into the cities on a daily basis, working in these office buildings. The commercial real estate sector is going to get decimated, as too will retail, because people aren't shopping. They're not going to be able to afford to shop because the dollar is going to lose so much value. Going to Walmart will be like going, to Saks Fifth Avenue. People aren't going to be able to afford to go shop there anymore. But to the extent that people do shop, they're buying stuff on Amazon or other, online retailers. They're not going to malls and shopping centers. And all of these places are in tremendous trouble. And so are the banks that loan money to the owners of these properties, because they're going to default. So this is a tremendous crisis that's coming. The real estate that will gain the most value will be like farmland, or land where you have natural resources that you can harvest or grow, and maybe land out in the suburbs, as a lot of people are fleeing these crime-infested, overtaxed cities where they no longer have to work because they can work from home. So you could see a dichotomy between real estate in the inner city and real estate out in the country or the suburbs, where more people are going to be fleeing to as opposed to fleeing from.
Well, where I am, I'm 90 miles north of New York City, Kingston, New York, and people flooded up here. Bloomberg at one time had, of 181 cities in America, the prices went up here the fastest. So it's exactly what you're saying is going to happen. And I want to ask you, before we go on, before we leave, a couple of things. And number one is, when, I've been very bullish on gold and silver as well. And I don't see silver prices going up, the way they should be going up. And they've really been stuck in this zone for a long time.
Yeah, the markets are in kind of the eye of a hurricane here. And I think you're going to see an explosive up move in gold and silver any day. What surprises me is every day that goes by that it doesn't happen. But it will happen, because the way the markets are looking at inflation right now in the Fed, the markets still believe that the Fed will be successful in its inflation fight, and that this big uptick in inflation will in fact end up being transitory. It's just a longer transition than they may have first thought, but the markets still believe that inflation is going to stay around 2% or lower over the next 30 years. And you can see that by looking at yields on 30-year bonds. You can look at the spread between Treasury inflation-protected bonds and regular Treasuries, that the markets still expect low inflation over the next 30 years, despite these massive deficits. And they believe the Fed can continue to print all this money, do all this quantitative easing, that the balance sheet can grow forever, and none of that is ever going to translate into higher inflation. And I think that's pie-in-the-sky nonsense. And I think soon the markets are going to have to come to grips with reality that the Fed is going to lose the inflation fight. It may not even really have the fight. It may just be bluffing, but ultimately not even have the guts to get in the ring with inflation based on the political sacrifices that would be made short-term for the economy and for employment and for the federal budget deficit. Because if the Fed fights inflation, the U.S. government is going to be forced to dramatically cut government spending, including spending on Social Security, Medicare, and things like that. And so to spare politicians from having to make those tough choices, it's likely that the Fed never follows through with this, and we go back to QE, and the Fed starts cutting rates again, even as inflation remains high. But when the markets realize that the inflation is not going away, and even if we have a recession, inflation is not going away, a lot of people think, well, if the Fed doesn't win the fight against inflation, recession will, because the Fed's going to raise rates high enough to cause a recession, and the recession is going to get rid of inflation. It won't. No. The recession is going to make inflation worse, because in the recession, we're going to have less economic output, but we're going to print even more money. But when the markets come to terms with